Monica, since we've heard from you just recently, I'm not ignoring you, but I'm going to start here next to you. Kim, I'm wondering if we can jump in here straight away, talking about striking a balance between embracing disruptive technology and complying with evolving regulations. If you want to speak into that for us.
Well, hello, everyone. I think
Is this mic working? There we go.
my voice was loud enough. Right. I think one of the things, it's a tricky balance, and they've always called it the regulator's dilemma. It's how do you balance innovation with regulation? And I think it's become even trickier for the regulators, and I think Monica illustrated that earlier on with what's going on in Europe. And there were a lot of discussions earlier on this morning about regulation catching up with innovation, and regulation is holding back innovation. And in my own personal journey in this space, I can 100% attest to that too. However, regulators are really trying hard, and it's very, very difficult. You know, I remember once a regulator saying that every single day he would have someone at his door going, we've got a new innovation, we've got a new, Brad's point, new innovation, what do you think? Can we do this? Can we do that? I mean, how can one expect regulators to regulate that? So what is happening here in South Africa, and I suspect other jurisdictions within our region will follow and are already following, and it's a little bit to take a leaf out of the book of what's been done in Europe, what's been done in India, what's been done in Brazil, or what's being done in Brazil, is that you regulate on the basis of activity and not entity. So you start looking at what is being offered, what's the activity that's being offered, and you regulate on that basis. And I think that's a sensible approach from the regulators, because then instead of saying banks this and fintechs that, and even, I mean, I'm getting tired of the word fintech in the sense that what is a fintech and how many different types of fintechs are there, and all the multitude of different places that fintechs actually operate in. So to answer your question briefly, I think it's a very tough call on the regulators. I feel for them, and I do believe that as we go into a new regulatory framework in this country, sooner rather than later, we'll stop, take a pause, it will be on the basis of an activity regulation rather than entity.
Yeah, thanks, Kim. Let's go back to you, Monica. I mean, you were chatting about this from a European perspective. Help us to see how, from the time that you've been here and the information that you have, how things are different between what Kim has just said here in South Africa and what you're seeing from in Europe, and are they so far apart?
Not necessarily. When you talk about regulating by activity, if you take for example, the consumer credit directive that we have, it regulates credit and how consumer credit has to be provided. And then, of course, in function of the licenses, we have different type of contracts of consumer credit that can be done by banks or payment institutions or e-money institutions. So it makes a lot of sense to me to move from regulation by entity to regulation by activity. It makes a lot of sense, and it's certainly a good step towards the level playing field you are discussing. So it's not so difficult in terms of all the data. All the discussion this morning about the importance of sharing the data is not so different from the challenges we are looking at European level. So I would say that the logic seems to be very similar. The stage of the discussion may be different, but that's depending on, of course, many issues. Another example of regulation by activity I can give you is MiCA. MiCA, I call this MiCA, but you call it here MiCA. So it's the crypto assets regulation, the new regulation we have. And it's about crypto assets, and it's going to regulate activities related to crypto assets, whatever the entity is. Then there are also specific licenses for certain entities that are defined in this law, but there is a part of it which is about any kind of operation in crypto and how such operations should be regulated in terms of, let's say, liability, in terms of protection of consumers, etc. So there is a logic to this regulation by activity instead of by entity, and I think is the basis for level playing field. At least this is my view, and yeah, that's what I think from my perspective.
Yeah, thanks so much. I just want to grab that mic there next to you. Nompikazi, what strategies do you feel banks can adopt to enhance financial inclusion versus these regulations that we're speaking about this morning or this afternoon?
I think one question I always ask is what do we mean by financial inclusion, right? At the end of the day, there are different definitions. Some of it talks about fair and timely access to appropriate and affordable financial solutions. In other cases, it's about creating wealth. But are you saying that if I can go and buy land in cash, build my house with cash, get my groceries in cash, get my airtime in cash, and do what I need to in cash, am I not financially included? So I think we need to be very deliberate about what we're solving for when we speak about financial inclusion. Maybe it's in tiers, I don't know what it is. Because then, when you then look at regulation, you can be very deliberate about what you're trying to guard against while taking those use cases into consideration. Because a lot of the time, there's that friction between trying to regulate and trying to solve for a problem. So I think it's very important to have that in mind. And also in terms of how we measure it. I think there was a lot of discussion around how many, the percentage of accounts. South Africa, 85%, Senegal, 56%, South Sudan, 6%. You can't just look at that alone. What is the activity? What is the usage? So there are a number of things I think that one has to consider. But I fully agree with activity-based regulation. I think that's the way it's going because you have to have an ecosystem mindset. At the end of the day, even when you talk about financial inclusion, it's not just the financial sector that can solve for that alone. You're talking about mobile devices, connectivity, infrastructure. We talk about Uber Eats. If my street doesn't have a name and I can't find it on GPS, then I can't benefit from that. So I think that there are a number of factors to consider.
Yeah, Kumaran, I just want to ask you to chat to us around this regulation. Help us to understand the processes, what's going on behind the scenes in terms of the regulators and how that's sort of juxtaposed with the freedom that you feel you have to be able to transact, but then on the other side there's the regulations.
Yeah. I mean, are there any regulators or policymakers in the room before I speak? Okay, I can speak. So Kim's touched on it, right? I mean, and there's a wonderful book called Pirates, Prophets, and Pioneers that talks about the cycle of regulation, innovation, and all of this. So typically what you have is some person or every now and again, someone comes up with a great new idea. Let's call it generative AI, and they're the first to hit the field, and they want to do all of these things, and the regulators are the ones that are stopping this from happening, right? They build up a business. The shareholders then come in and say the business is doing well. We need to protect it because the next set of blokes that come in are the pirates. They're going to do it in a slightly different way. So typically, what happens then is these pioneers who have partnered, or these prophets who have partnered with pioneers and think something like electricity. Edison comes up with electricity. He needs JP Morgan to monetize it and turn it into something commercial. And then what you start seeing is the pirates coming in. And that's when everyone runs to the regulators and say, save me. The pirates are stealing my money. Help me. It's my business. I'm a good ethical business, right? I'm here to do the stuff that society needs, right? So the regulator sits in a very difficult position because what they have to solve for is 100%. There's not a single company in this room that can solve for 100% of financial inclusion in South Africa. That cannot be done. So the ask of the regulator is a very complex ask. When we talk about the regulator, when we talk about the Constitution of South Africa, we don't have a constitution for rich people, poor people, people living in Sandton, people living in Khayelitsha. We have a constitution that says everyone gets the same thing. Now, if you know about Pareto efficiencies and how these things work, it is very difficult to do this. Getting to 100% is close to impossible. That is the demand on the regulator. That is what we want them to do. We want them to protect us when things go wrong. That's a powerful demand. So when we do things like, and Brad spoke about cash. So I'll ask you a very simple question. Why is it that some things are adopted in the world at unbelievably exponential rates? And we can't seem to get some things like payments, all sorts of things. We can't seem to scale them up to the same kind of levels. The answer is quite simple. Those things that you think about, the internet, cash, COVID-19, that exponential growth rate is because you introduce something simple to a complex market. Our mistake is we try to solve the complexity by trying to make every possible thing to come together. And that in turn, because we then add the caveat of monetizing it, that in turn puts the regulator in a difficult space, because we've engineered the Starship enterprise to solve the problems of every single person in South Africa, and the regulator has no choice but to step in and protect. COVID is a virus. All it does is one simple thing. It propagates. It's grown faster than anything we've created. Ask yourselves why. So, regulator, big job. Please have sympathy, behave.
Kim, I'm going to go back to you. Did you want to comment on that, please, Monica?
Yeah, sorry, I just wanted to say something about the role of the regulators. For example, for instant payments in Europe, what we've seen is that the industry has been trying to push instant payments to be used before, but it's really with the instant payments regulation that it will be mandatory. And so the intervention of the regulator has been extremely helpful in our case, for the simple fact that they're saying, for example, the cost of an instant credit transfer cannot be higher than a normal credit transfer, has obliged the commercial banks to keep the prices low enough so that the users can also profit from this. So in my opinion, the intervention of the regulator, if it's there to allow access to more services, to more services for the consumers at cheaper price, is a good intervention. And at least in Europe, that's what we've seen. So the European Commission, interestingly enough, have been studying India to do this. So they looked at India and Brazil and what happened there for real-time payments. And they understood that, for example, in India was the government that made a number of measures that allowed the development of instant payments, or real-time payment, as they call it outside of Europe. So there is indeed a role for the regulator, in my view, to create a framework which allows products to be developed and not become extremely expensive for use, at least at the beginning, for users to be able to use them.
Thanks, Monica. And Kim, we've heard quite extensively this morning about data, and now the transparency of the data, and I suppose being accountable to the fact that you are taking people's information and you're putting it to use, as we've heard earlier on. What kind of regulations are there to ensure transparency when it comes to collecting that data?
Well, I think there we have to look to Monica, because the GDPR set the gold standard across the world.
Yeah.
So the GDPR has definitely set the gold standard. And I mean, once again, and because there are no regulators in the room, you know that I'm not saying this to curry favor with regulators, because I seem to be very pro-regulators at the moment. The South African regulators have introduced the POPI Act, which I'm sure you all know, and it's made our lives more difficult. So yes, I do think that regulators have stepped in. Having said that, the comments were made earlier on today, and I 100% agree with it. I mean, who even thinks twice about clicking the box that said consent to the cookies? You know, I mean, there is an element which, for the user, it's nothing. We know our data is being used. We know everything we do is being mined in some way whatsoever. I think there was a point made earlier on that's really important, is that we have the right to say, leave it, it's done. I love that idea about the bank take my 10 fields and move them off to another bank. So I think that those are the kinds of things that are important. So I know my data is being used, but if I say no, then you've got to be able to, and that's what I would like the regulators to do. That's where I would like to see some transparency, is if someone says the right to be unknown. I think that's much more important at this stage. But having said that, I do think it's very, very important that we have these protections in place. The data belongs to the data subject. And I mean, yesterday I was working with some of my colleagues, and we're doing something in another country, and the data will be transferred from one country to another country. And I was like, whoa, let's just stop. And that's not my area of expertise. But we have to find out whether that's allowed, what we can do. Are we storing the data in the cloud? Is the data coming back onshore to South Africa into our systems? So these are absolutely fundamental questions we have to ask when we're building products and services.
Nompikazi, just on this that Kim's just commented on, the education of the customer, I guess, in knowing how their data is being used. How do you feel, if you could speak into that idea of helping the customer to know more about what their data is doing and that transparency for the consumer?
I think it's tantamount. It's important, right? I think earlier on there was the discussion about data being everybody's responsibility. So the customer must understand how their data is being used, how it's being protected, but they themselves need to do that themselves. Employees who manage data need to also do that, and that should be a prerequisite actually before customers consent to their data being used to understand the full extent to which their data is being used. And I think also to some extent, we spoke about regulation and compliance, that sometimes there's opportunities there because when you look at standardizing it, it makes it easier for people to understand and also to comply on both ends of the spectrum. So it's important and it's key for all parties to understand how data must be used and protected.
Yeah, I'm not sure if you want to join us, Kumaran, on that data conversation and around regulating it.
Yeah, I mean, you can't catch up with this, right? Machine learning and things like that. If you know how machine learning works, is there's features built into into the neural networks and things like that. So as fast as anyone tries to figure out what item of data is being stored, we can create statistical weightings that can take other forms of data and input at increasingly fast velocities, right? And generate profiles in terms of what you're going to do. Now, it's very difficult. You know, it's like saying, well, I don't like the food that's at that restaurant. Well, you chose to go to that restaurant, right? You chose to eat there. Once you avail yourself of the service of a corporation, you're in a difficult spot. I think the thing that will change what happens with data is taking the money out of the data, right? And I know that sounds like a horror story, but look at where we are. Look at the laws that are being built. The laws that are being built to protect us from things that did not exist years ago. We're now worried about things like privacy, we're worried about layering of data, we're worrying about data being sold, all of these things. We're moving from Web 2, which has been corrupted, to now Web 3, which is essentially about moving control back to the hands of the people that are using that. That said, however, how do you, inside of a society, inside of a state, where you have to subscribe to the laws, how do you control a system? Because that's the role of the state. It has more power than any individual. It is there to protect you from someone else's actions. How do you actually get to this? So we're in a very, very delicate space at the moment in terms of data protection and these kinds of things. We're not going to get to a perfect way to protect people from data acquisition and things like that, because as fast as the government, says, well, you know what, personal information is 1, 2, 3, 4, 5. Well, does that include if I waved my right hand at the traffic light at 3 a.m. in the morning? You're never going to catch up. And the algorithms that can actually reverse propagate, can back navigate, that can actually calculate, well, what is it I need to sell this person because of these features of data are continuously going to increase, because that is the motivation for companies, to collect the data to sell products.
Here's something that we haven't actually touched on. Do you want to jump in there?
Yeah, no, I wanted to just say that I wanted just to add a comment. The frontiers, to me at least, from my perspective, being in Brussels, really the frontier is data protection versus in payments, especially data protection versus fraud prevention. Because if you don't have access to data in order to prevent fraud, then that's a problem. So in the Payment Service Directive 1 from 2007, there was an Article 72, that was precisely explaining, that was before the GDPR, there was a data protection regulation, that was explaining precisely that the protection of data stops where it's necessary to use this data in order to prevent fraud in payments. This article disappeared in PSD2, which is the current regulation we are applying, and is coming back in PSD3 and PSR, because the Commission has realized that even after the GDPR, prevention of fraud is as important, if not more important, than data protection. And I think the balance to be found is there. And it's a very delicate balance to find. Which data can you use in order to prevent fraud without this becoming a blacklist, which is completely forbidden by the GDPR? That's the frontier, at least for me. And now we are to the point that when we look at the GDPR and AI, and the use of AI to prevent fraud, that's the discussion we are having with the regulators. We have now a public consultation ongoing that closes in 15th of September, 13th of September, about use of AI in financial services. And half of the content is about this. So AI is very important, especially to prevent fraud, but how much of this can we use having the GDPR to apply? So for me, this is the frontier. Yes, let's protect the data, but what about prevention of fraud if you cannot use the data? Well, in Europe, at least, that's the frontier now.
Yeah, Nompi, jump in here quickly, and then we'll hear what Kumaran has to say about that.
And I agree with that. But I think also part of the conversation is also around transparency. And I think earlier on there was mention about the purposeful use of data, right? So at the end of the day, what do you need that data for? What are you going to use it for? And then that data custodian needs to know what you're going to use that data for as well. So yes, it's hard. I know fraud, of course, security is a big concern. But if you're transparent about what you're going to use that data for in that context and in any other context, whether it's financial services or not, I think that's what we need to move towards too.
Thank you. Kumaran, do you want to comment?
Yeah, just to comment on fraud, crime, and these kinds of things, right? So we have fraud and crime in cash, right? And I'm not saying it's a good thing, but it's at a level where we kind of understand it. Right, now we go to this exponential scaling thing called digital. And a new form of fraud and crime has come about. Authorized push payment fraud. Right? We've got to be very, 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 very careful. Right? And I feel very passionately about this. Digital does not replace the physical world. It cannot. I'm a programmer. This is my background above and beyond being with Baza and all of that. You cannot replicate the physical world in the digital. If I hand you these pieces of paper, you have it. That's the double spend problem solved. It took computer science 70 years to figure out how to solve that problem. We are not close in the digital world to replicating this. So where I'm getting to with this is we must be very, very careful because we're facing exponential growth. And on top of this, we are facing anonymous, automated exponential growth because we're handing this over to artificial intelligences and the like. We're not going to be able to stop this. When it starts happening at the rate of millions and billions of transactions per second, the nodes of error that happened in the digital system exponentially increase. Authorized push payment fraud is happening. And you can put as many controls as you can think of in terms of the entry into your app, into your mobile phone. But ultimately, all of those controls, all strong authentication, resides on the fact that you have to allow access of the consumer to his banking, to his store of value. If I put a gun next to someone's head, one-time PINs, private bankers, all of that become redundant. Your entire balance sheet will be transferred, a beneficiary will be set up, and you will be exploited. We've got to be very, very careful. And this is why things like limits, this is why being careful around real-time payments. Yes, it's very sexy to do a real-time payment. I think, Monica, you would know better. I think it's the UK that's actually backtracking on real-time payments because it's dangerous, right? Sometimes things might seem sexy and wonderful and we can do e-commerce in milliseconds and we can do all of this stuff. But sometimes there's a reason why humans work in a certain time frame and why there is a need to pause and be able to stop things.
Kim, you wanted to add something?
Yeah, perhaps just, if you don't mind, two things. The one is that I recently interviewed the CEO of PayU, and we were having a discussion about, future-proofing a financial services business. And she made a comment, and a couple of people in the audience agreed. Version 1 of any product or service you put into the market, you put into the market to see what the fraudsters do to it. It's a given. You build it, you put it out there, and you see what the hackers do and everything else, and then you go back to the drawing board and see how you can fix it. But, I mean, to Kumaran's point, if someone's got a gun to your head, there's not much you're going to do about that, one way or the other. And now I've forgotten my second point, which was the end of Kumaran, so someone else make the thing that.
I'd love to open the floor. I still have another question. We're running very short on time. I see a question over there. If you don't mind getting a microphone there, thank you so much. Thank you very much. We look forward to your question.
Thank you very much. Am I audible?
We can hear you. It is a bit soft. I'm not sure if you can hold it a bit closer to your mouth.
Closer to make. Okay,
Yeah.
thank you. All right. I just want to ask the panel, what do you think the approach should be for us to forge, that clear path for Africa payments? Because there are different regulatory requirements for different jurisdictions. So I think a lot of times we want to solve for Africa, but we sit in South Africa, solve for South Africa, and then we think that we can scale into Africa. So I just want to know what the approach could be, Thank you.
Do you want to take that?
Yeah, I'll
You've
take-
lifted the microphone.
Yeah.
You're-
So at Yoco, we've experienced that. So we're a South African company. We've been successful here in South Africa. You pick up the model. And to the point that was made earlier on around, why M-Pesa and, the mobile money wallets haven't succeeded in South Africa. So we've done the reverse. We've tried to take our successful South African model and go and cut and paste basically and put it in another country. It's impossible. The frameworks are completely different. The environments are different. The people are different. And I think that is the challenge we face. And I think a world where we had a universal regulation across the world would also be a scary world. I think what's much more important is to find these bridges. So there's certain things. The KYC legislation, one would expect that to be the same from one country to another because universally you're trying to solve the same problem. I think from a privacy perspective, there are also lots and lots of pieces that should be similar, and you've actually got Maxine in the room here who knows better than anyone else how difficult it is to even just get the SADC region to talk the same language around all these things. So it is extremely difficult, but I think it's finding those nuggets of regulation that are absolutely essential, and Brad will talk about the challenges of cross-border payments. I've also been there trying to get those things to match is impossible. So looking for those areas where at least some matching would not prevent a service or a product from existing. But this uniform one regulatory framework, it's never going to happen, and it probably shouldn't happen. So every country, every society has its own, it's just its own nature. Yeah. Thanks.
If I may, you don't need to save Africa. Africa is sorted. It does not have to go through the 200 years of making decisions based on past thinking. You need to not get in the way of the 1.2 billion people that are figuring out how to use decentralized models, not urbanization models, right? That's the problem. Is we've created ways of thinking that say the only way that you can solve the problem is to have an epicenter like Sandton, and everything flows out of Sandton into the rural areas and things. That technology, the mobile phone, is decentralization technology. It bypasses geography. Africa, we used to say solutions for Africa. Then we used to say African solutions for African problems. I'm 55 this year. You can contact me in a few years' time. I strongly believe that what you're seeing is African solutions for the world. It's going to happen because the business paradigms that are coming out of Africa are unlike anything in the world. We have all the empirical evidence. Why did M-Pesa happen in Kenya and not in California? Why? Because California is in an equilibrium based on 200 years of industrialization, manufacturing based on a system that they've created. Kenya did not have that equilibrium. So getting in the way with it and bringing archaic thinking into it and saying, well, you've got to follow these laws, that's not going to work. The other example is India. We all are jumping around about the UPI and how amazing the UPI is now. 15 years ago, we looked at India and said, shame, poor India. It's a poor country that can't afford to pay its bills. Where are they today? India has the largest digital identity system in the world. The largest digital identity system in the world. And they have never mentioned open banking once in their entire path. So let them do what they do.
Sorry to interrupt you. Would you like to have a final comment? We're out of time. Unfortunately, we had such a big panel here today. If you want to add some final remarks.
Yes, I just wanted to say, I guess the first step is identifying common use cases, right? In terms of a common problem you're trying to solve for. and then understand whether or not you need a centralized or decentralized way to manage it. At the end of the day, we can all order food from the same kitchen, but I don't eat chili. Maybe you'll have chili, right? And you find a way to do something about it. I know it's not as simple as that in the context of payments. But I know the EU got it, well, is still trying to get it right. But to some extent, maybe you need to then look at it from a regional perspective and see how you expand beyond that. We won't be able to do everything. So I agree to the point that there's some things we won't be able to solve for, but there are some common use cases that we want to solve for. Let's start there. Something simple. One way to send and receive money. And then when you're looking at them, the country nuances, then you'd have that regulation that kicks in. So we can't just try and do everything at once. Take it one bite at a time, one chunk at a time, see what works, and then you get to it. The problem is when you try and do it all, then it collapses, and then no one wants to touch it again.
Thank you very much. A round of applause, ladies and gentlemen, for Monica, Kumaran, Kim, and Nompikazi. Thank you. Thank you so much.